Welcome to the Daily Update Podcast, where I'll go over the action in the market for Thursday, May 29th, and we'll see how things look for Friday, May 30th. Recapping what happened on Thursday, it was a disappointing day for the markets, despite an initial spark of optimism. Stocks opened higher, buoyed by Nvidia's blockbuster earnings report, but the rally fizzled out quickly. The S&P 500 set its intraday high at the open, as did other indexes, only managing a modest 0.4% gain by the close, settling just above 5,900 and the daily pivot. Trading volume was notably below average, signaling a lack of conviction. The VIX, which measures market volatility, is still below 20 at 19.18, but momentum indicators such as the TTM squeeze and PMO are showing signs of rolling over, even though they remain in extreme positive territory. The Nasdaq 100 bullish percent index is holding firm, but short-term indicators are mixed, pointing to indecision. Sector performance told an interesting story. Defensive sectors, including real estate, energy, utilities, and staples, outperformed the broader market, while tech and discretionary lagged, despite Nvidia's strong showing. Growth stocks also underperformed value stocks throughout the day, hinting at a cautious shift in investor sentiment. Looking at the economy and market context, economic data released on Thursday painted a mixed picture, leaning toward the weaker side. Initial jobless claims came in greater than expected at 240,000, while continuing claims also rose to over 1.9 million. Personal spending in GDP was revised down to 1.2% from 1.8%, and pending home sales plummeted 6.3%, far worse than the anticipated 1.1% expected decline. On a slightly brighter note, GDP was reported at minus 0.2%, a touch better than the forecasted minus 0.3%. Still, these figures underscore growing concerns about an economic slowdown. Adding to the uncertainty, tariff developments continue to weigh on the markets. The U.S. Court of International Trade ruled that President Trump lacks authority to impose reciprocal tariffs, but an appeals court disagreed, setting the stage for a likely Supreme Court battle. With existing tariffs, currently at 10% globally, 30% on China, and 25% on Canada and Mexico already in place, this unresolved issue is keeping investors on edge. From a broader perspective, the market still remains non-trending. The S&P, though, is above its 20, 50, and 200-day moving averages, a positive long-term signal, but declining volume and overbought conditions continue to suggest exhaustion. The boom indicators, which measure how far away price is from moving averages, indicates a potential pullback. Valuation concerns are also mounting, with U.S. equities looking increasingly overpriced compared to global markets. Money continues to flow into tech, but is also seeing consistent outflows, with bonds and stocks seeing similar inflows this year so far, while money markets remain the dominant force. Looking ahead to Friday, May 30th, the last trading day of May, we can expect potential volatility driven by month-end dynamics. Money managers may engage in window dressing and portfolio rebalancing, which could amplify price swings. Key data releases to watch include personal income and spending, core PCE inflation, which is expected to hold steady at 2.6%, Chicago PMI, and consumer sentiment. These reports could sway market sentiment, particularly if they deviate from expectations. Geopolitical developments, especially around tariffs, remain a wild card. Seasonality data suggests a cautious outlook. Historically, the last trading day of May tends to be negative for the Dow and neutral to negative for the S&P and Nasdaq. However, post-election years often carry a slightly optimistic tone, which could provide some support. From a technical perspective, the S&P 500 remains positive but lacks a clear trend. Key levels to watch include the daily pivot levels as well as 5,900. A breakout above last week's high or a breakdown below last week's low could signal the start of a new trend. However, an inside week, where highs and lows stay within the prior week's range, would point to continued indecision or even a potential reversal. In summary, the market is stuck in a sideways pattern with positive long-term signals but mixed short and intermediate-term momentum. Economic uncertainties, including negative GDP, Rising jobless claims and tariff disputes, combined with month-end dynamics, could make Friday a volatile day. However, with conviction remaining low, investors should brace for choppiness. Thank you very much, and I will talk to you in the next podcast.